Hey, welcome back to Boss Lady TV. I know it's been a minute, or we haven't been just chilling around. During coronavirus, Boss Lady TV, we've been working. So what we've done, we've actually changed locations. We've got a brand new studio where we provide photography, videography, recording, mixing, mastering, and a number of different services. We still have our design division where we can do app design, website design, logo design. Whatever you need, just holler us, we got you. So this vlog is about cryptocurrency, Ethereum, Bitcoin, and blockchain. I'm also going to be talking a little bit about stocks such as Coinbase and Tesla. So stay tuned for more information. So I'm not going to go too much into day trading, but in another video I will go further. I'll discuss different types of traders. I'll discuss signals, all the different ways that you can actually get into either trading as a day trader or investing in stock. What is cryptocurrency? So essentially, cryptocurrency is a digital currency that's actually used to exchange services or buy products. So essentially, you've got your normal currency. For example, we're in England, you've got your GBP, your Great British Pound, you've got US dollars, you've got the yen, for example. So these are all different currencies, but cryptocurrency basically just means online currency. So cryptocurrency, online currency. So Bitcoin is a type of online currency. Ethereum is another type of online currency. So I just want to talk a little bit about the security and stability of cryptocurrency. If there's any changes that needed to be made, any drastic changes that would affect the market, the amount of money that you've actually invested into Bitcoin, it takes 50% or more of Bitcoin holders would need to make a unanimous decision. So 50% or more of all of the Bitcoin holders didn't make a unanimous decision, certain changes will not be able to be made. For example, if you compare this to normal currency that you have cash, whether it's GBP, USD, it will only have a certain number of board members that will make a decision. So what that means is, for example, if you've got two different currencies now, and one it only takes, maybe say for example if there's 5 to 10 board members making the decision. So there's 5 to 10 people that's making the decision. So their decision, all of us are going to be affected by the decisions that they make. Compared to now, digital currency, cryptocurrency, all of the coin holders, 50% or more of them need to make a unanimous decision. So if 50%, if half of them don't agree, those changes are not being made. What that does though, it creates a sense of trust amongst people. For example, currency that we use, we have to get that money from the bank. So if you go to the bank, say for example, you say you want to withdraw, I don't know, 5k, 10k, whatever the amount you want to withdraw, they don't have that cash right there. They're not going to give it to you. They might be asking you questions about your own money. There's government legislations that are in place to make decisions about your money. The fact that we don't have to go to the government or to these banks to get currency, we can actually get digital currency. We can trade pretty much everything. If you have a look, you'll be able to buy with Bitcoin. If people, for example, start using a lot more digital currency, what's going to happen to the economy? What's going to happen to the businesses of the banks and of the government? It's going to go down. So as these digital currencies grow, we're going to definitely see a change in the market. The government and these banks are actually going to have to try and do something because certain countries have got a lot more wealth than certain other countries. Most of the traders who actually use Bitcoin, for example, who might set up a business, are in certain other countries, certain maybe third world countries, for example. If they're able to start using those currencies, start trading independently, start getting their digital money rather than having to rely on the banks, the business that's going to be flowing through the banks is going to go down. You could even say that a financial crisis may happen. There's a lot of hearsay about what could and what should and what might happen as cryptocurrency continues to grow and get stronger. If you think about it, money is just the numbers on the screen. I'm sure you've heard of a number of different hackers who might have hacked into certain banking systems or whatever accounts and changed around the figures and then taken out the cash. How would they have been able to do that if the money was not a digital thing in the first instance? Of course, what they've done is they've got the number on the screen, it's digital already, and they assign that number of money to the paper, to the cash or the coins, whatever it may be. So if you think about it, as I said, the original instance, the money is digital. So what they're doing, and what we're not actually realizing what they're doing, they're already using digital accounting system figures, which is numbers on the screen. You might go to a bank, they assign those numbers on the screen to the cash, they hand you over the cash. You might go to the bank, you apply for a credit card, they assign those numbers onto a credit card. It's a piece of plastic. It's not paper, it's not cash, it's numbers that they've assigned to a card. You're now able to take that card and use it in a number of different shops. Again, you're not actually handing them cash, you're just handing them plastic. They take the card, they scan it, or do whatever they do, you put your PIN to get through security, whatever, swipe. What I'm saying basically is that based on the numbers that's on the card, assigned to the card, you're then able to trade, you're then able to make purchases. You're even then able to get cash back. So you're able to then take the money off of the screen, take it into this thing called cash, the actual tangible money, which certain people believe is worth more, when in fact it's really not. Credit is worth a lot more than cash in hand if you know how to use it right, but that's another vlog for another day. What they're doing is they'll assign the digit onto the paper. Now, because you've taken that digital amount, those numbers, off of the plastic card, they're then going to charge you a fee. Why are they charging you a fee to take out ATM cash advance off of a credit card? If it's just your money, then they shouldn't be charging you a fee as such. But of course, it's digital. What they're then doing, somebody's having to process those numbers, whether it's a machine or whatever, and put it onto the cash so you can take out your money. That's one step forward. Credit, cash and credit. If we go one step back, we wasn't always trading in cash. We were trading in gold. People would trade gold bars. Before that, people would trade items of value, items of wealth. Paper was invented when they cut down the trees and realized, oh, we could use this. If you think about paper and its durability, the reason that they've changed it from that and they've made it all the texture that it is now, plastic, is because that paper wasn't lost and you need it to last. If you want it to actually be a commodity that you're going to be using in a system, in a society. For example, there's a company called MicroStrategy. You can even research the figures. The owner had 1 million in his treasury account. Now, what he done is he took 4.5 of that mil and brought Bitcoin onto an online currency. That's the faith that he has. His method and his reason behind that was his belief that having it just sitting in the treasury is just having it as a melting pot. If you know anything about inflation, and if you have a look into that, if you just put your money into the bank and leave it there and don't touch it, depends on what type of account you got, you may end up having less money because of inflation, different things like that. The currency is not as strong as it used to be. So just to get your head a little bit around the infrastructure of cryptocurrency, basically it's blockchain, then you'll have Ethereum, and then for example Bitcoin, and specifically in that order, Bitcoin and Ethereum. Well, Ethereum and then Bitcoin are the most popular digital currencies. If you want to know where you can buy them, there's a number of different apps where you can actually buy them, a number of websites where you can actually buy and invest into cryptocurrency. The main ones that people speak about of recent is Coinbase and Trading 212. I'm going to speak a little bit more about Coinbase, Trading 212 and Binance. Now I'm just going to speak a little bit more about Coinbase because it's fairly new. It's actually going to be going public quite soon, and I feel like that will be the perfect stock to invest in. Now I'm not a trader, I'm not a professional trader, so don't take my word and go and dash away all of your life savings into the thing and then come for me in my comments. I haven't got time, I haven't got time, I haven't got time. Okay. So the reason I feel like it will be a perfect stock to invest in is because if you have a look at the price of the shares, so you can have a look at from when they first started to where they are currently, and you can see that it's gone up. So it might take certain little dips, but it's constantly been getting stronger. Another reason why I feel like it's a perfect stock to invest in is because some of the attention and information from the media. Now the reason I feel like it's a perfect stock to invest in is because of some of the attention from the media. I follow a lot of blogs on Coinbase and trading, Bitcoin and Ethereum. Now with Coinbase now, there was a recent post what said Coinbase fires 60 people, 5% of their employees. The way they're trying to spin it is that because they're firing people, they may be struggling. Now hold on. Alright, cool, that's what they've said. So if you look at the facts and the figures and their explanation for those facts and figures, now they've said 60 people, which is 5% of their employees. So if 60 people is 5%, 10% is 120 people. So 120 people is 10% of their employees. So if we want to get 100% of their employees, add one more zero. 100% roughly of Coinbase's employees is 1,200 people. One company has now been built up to have 1,200 people. Okay, you can say, oh, they're firing 60 people. Well, if those 60 people are acting up and you've got a business where you can have at least 1,200 people making profit, working, and your business is still growing, I'll get rid of those 60 people. If you're holding the business back, bye. I don't see that as a negative thing. I see it as a positive. Reason being, it's showing the strength of the company. You've got a sole trader, you've got a micro company, you've got a small company, and you've got a macro company. To qualify as a macro company, you need to have at least 250 employees or more. They've got 1,200, obviously give or take. So they're 4 times the size of a macro company right now, and they're still growing. That's one reason why I feel like it's a perfect time to invest. Second thing is, they're going public around February, March. Currently it's still a private company, so you actually can't invest in it. However, the company is growing so strong to the point now that they're going public, they're looking for investors. They know they just want to keep on growing and growing and growing. They've submitted a documentation outlining the prices of their stocks, etc. That document hasn't been made public yet. However, because it's been submitted, they are on track to becoming a public company. So what I would suggest is February, March, if you want, as soon as you see that Coinbase has gone public, invest. Now, just like business, a new product comes out, anything, you're going to have the people who jump on it off rip. They want the latest this, the latest that. Then after that, they're going to have it for a little bit. Then you're going to see the other people jump on it. Or they want to get the latest this, the latest that. You're going to have those who are going to put their money down, who are going to buy some stocks in Coinbase. So if you buy a share, obviously this is not the price, but say for example, if you buy one share at £5 on Monday, and on Wednesday, that same one share that you paid £5 for now costs £7. Okay, so you've made £2. You haven't. All you've done is just left it there. You've just left it. Say now come the ending of the week, Sunday now, it could be worth £10. Obviously that's a quick climb. It might go up and down a little bit, but it will continue to grow, continue to grow, continue to grow. That's why it's more important that you jump in earlier. So the amount of coins that you've got is saved on a database. You might start thinking to yourself, oh my gosh, that's not secure, woo, woo, woo. But where do you think your money is saved when you go into the bank? In a database. Now you might say, oh, I don't use bank, da 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 da. Okay, fair enough. The strength and the value of the £5 note has been saved somewhere. So it's still been saved in a database. It's just a different type of database, but your money is still saved on a database somewhere, digitally stored. Another stock, what I feel like is quite interesting to look at is Tesla. Now, there's been a huge peak in Tesla. Of course, there's been certain dips and it's shot right back up. So I'll say, while it hasn't quite got all the way back up, now would still be a good time to jump on and invest. These are long-term stocks, long-term investments. So put your money in Coinbase, something that you're able to do, buy the shares, put that away. Don't even think about it. You might want to watch it, cool. But don't think about it. Don't think about pulling it out and buying it again. That's not what this is for. This is long term. Same with Tesla. Day trading, as I said, that's another thing. So that's where you would buy and you'd sell. You buy and you sell. You watch as the price goes up and down, up and down. So for example, where I said if you was to buy one coin for £5 and then on the Wednesday it's £7 and the Friday is 10, you will have little dips in between. So you'd buy it low, you'd sell it high. The price goes back down, you buy it low, you'd sell it high. You'll just keep repeating that throughout the day. That's what a day trader is. Anyway, I digress. So back to stocks. Long term, you buy them, you invest, and you just leave it. Forget about it. Another type of stock is the S&P 500, which is a little bit more safe and a little bit more sturdy, but it's low risk. So as I was saying, the S&P 500 is a more safer stock. So I would suggest if anybody wants to start with investing, but they're not really sure about it, and you want a safer stock, S&P 500. It definitely increases, just at a slower rate, so you won't get too shocked if you see a sudden dip in your money and want to pull out. It will kind of sturdily increase. Now, what the S&P 500 is made up of the 500 strongest stocks in the US. So what you're doing is you'll invest your money into S&P 500 and it will spread your money out across all of the 500 different stocks. So essentially, you've got now a stock portfolio of 500 different stocks, only for investing in that one S&P 500. That was just the introduction. Thank you for tuning in. I hope you enjoyed. Don't forget to like, comment and subscribe below.